Here we have another example, this time on the euro versus the yen. Thing is, with these examples, we're never going to be able to give you a perfect scenario each and every time. This example is just to show you that even within a strong trend, we do have certain areas called an accumulation area where we could still look for our opportunities. Remember, the beginner strategy focuses on this accumulation area or the ranging area. So we've come to our charts and it's trending. It's a strong volatile trend. We can draw any line that has at least 2 touches on it and continue, and then that is your trend. So in this case, prices comes up and it even respects the trend, and this is what the industry would call some entry cheese, meaning that people are waiting at this area and not waiting for any sort of confirmation other than prices has come down and touched the trend line. And then we have traders immediately buying. The thing is, when they immediately buy here, there are stops right under this area. Let's see what happens next. Next, we have the breakout traders who are taking out all the stops that were under this area. And now this is also an opportunity for us to look for our strategy. As I said before, if there's a trend line break, we need to see just another clue that prices will start the accumulation phase. So number 1 is the trend line break, and number 2 is some sort of failure to follow through or a rat trap. So in this case, we have a failure to follow through. Prices is ended there. This is drawing our playing field. That's the highest point that prices has ever gone on this chart. And then also we have some structure in that area there. And also we can see we have some structure. So now we have a confirmed accumulation stage. What's happening here is prices are stuck in a range. Buyers and sellers are both stuck. Probably what we will see is a continuation of this trend. But while nothing is happening then, while the decision by the market maker hasn't been made yet, we can trade this range. So whenever prices are inside this range, we trade either short or long. As you can see, prices are being respected at this range all the time. So in that area, we do have our strategy in play, and we do have some opportunities in this area over here. As you can see, prices are going up following the long trend, but the accumulation phase has started. So let's just calculate how many pips there were in this area, or how many trading opportunities there were. So as soon as prices makes the high and the low without really breaking through, that's our barrier. And then we have 1 trading opportunity there, 2, 3, 4, and then 5 trading opportunities before price starts breaking through again. And then we see prices continuing with another trend going along. And this is where we ignore the envelope. Look at the prices here. Prices are clipping the envelope, which is suggesting that we now trade short. However, we are not within a range anymore, so we don't trade short there. As you can see, we are getting more and more highs and higher lows. And then until the break happens, this is where we could start now looking for another trading opportunity. We have our break. Then, as I said before, we need a failure to follow through or a rat trap. In this case, it looks like a rat trap. We need to confirm whether this is a rat trap confirmed with the RSI. Firstly, what you do is you take your indicator, drop your RSI indicator on the chart, And then you notice that you have your higher highs here. The RSI fails to follow through. So this is a qualified rat. So we have a break and a failure, or we have a break and a qualified rat trap. So now we can start looking for the accumulation phase again. However, if prices breaks this level, it means it's a continuation of some sort of a trend, so we need to look for that. Then we have that level over there, which is the previous high. We also have our low point that broke the. So we need another point now. Looks like this is some structure busy formed. So now we have our range or our accumulation potential phase. So we take our crosshair tool just to measure in between here. It should at least be 100 pips. It's just to make the trade more worthwhile taking. So you have your potential range. See what happens. So here you look for selling, it comes down, and you buying, and look for selling opportunities there, or selling opportunities there, and then buying opportunities, and it comes all the way down. Yeah, but before it comes down, obviously you look for another sort of setup below that area, whether it makes a failure to follow through or whether it creates a RSI rat trap. We don't know. But inside the area after the confirmation, again, after or before prices has decided to either go long or short, you can see that there is one opportunity there, another one there, and there, then the massive one coming there. So inside a trend, there are small accumulation phases that are still happening that we could still look for opportunities. Let's just go further here and notice how prices respects these levels again. Now here we can have the entry cheese again, and then this is a typical situation to go long, again following the longer term trend. Yeah. Okay, so I hope that one was helpful.